Hello and welcome to today's Trade Tracker session 6. Oh man, I have some really exciting things to share with you today. Keep in mind probabilities over prediction. To significantly improve your trading, I suggest you refrain from trying to predict what you think the market's going to do and stick to the probabilities. I have some real good examples to show you what happened today in the market, as well as this whole last week, actually, this last week's update. I love to get some information to you during the week. So click the subscribe button to receive for these YouTube videos. And then once we open up the Apex Traders Club, you'll be welcome to join us and I can shoot over to you this information real time as it's happening. I'm going to start real big picture with long-term time frames and go all the way down to the 1 minute time frame. I'm going to show you how to use probabilities to give yourself a significant edge in the market. There's no reason to try and guess and hope and wish what you think the market's going to do. If you've been watching the last number of weeks, you've seen this chart. These are the various channels. I want to call your attention to what's happening over here. We're in channel 7 right now. We've been there for quite some time. The previous trade tracker sessions explain all this chart and the channels in detail. This is session 6, and it's 8 o'clock p.m. Central Standard Time, January 22nd. When we get down to this lower trend line, going back all the way here, this channel 7, we've been trading in this channel since January 6th of 2023. 2 full years. In the last 24 months, we've been trading in this channel. Price has been respecting the support line for the last 2 years. This drop was the Trump tariff scare that we had about a year or so ago. We came right back up to this channel. If we break down through this yellow line, we're going to most likely start trading in this lower channel, which is channel 8. We never traded in those upper channels when price went down to a lower channel. So now we're right here on the edge between channel 7 and channel 8. And I'm going to show you some other charts that may push this down, which means that we're looking at the probabilities of a bearish market. So if we get down below this trend line, that's not good for the market. We could start trading in here for many weeks or many months. We'll see what happens. If this holds, that's good. If it doesn't, we could begin trading in this big range here, all the way down to 22,000. In the next few months, we could see this range here of 25,000 down to 22,000. If we break through here, that 3,000 point range could certainly be possible in the next few months. This is a weekly chart. All these go back to the COVID low. That blue line goes down to the COVID lows. When the market rallies up, it hits the blue line there from the COVID lows. And this is back on August 2022. And progressed, price bounced off the line. And here, whenever price came up to the COVID low, price bounces off it. I drew my arrow here because we have to be very careful. Price is closing right on that line. It's been up in here this whole time from July 2025. So August, basically 6 months, it's been trading right in the zone here. If we start closing below this trend line, that's not good. We could see some negative bearish sentiment. I'm not predicting that. I'm just telling you the probabilities are if we start getting closes below that line, the probabilities significantly increase for an extended sideways to down market for a period of months if we close below that. What's really interesting is I also worked one up in a monthly chart with the same channels. That dotted blue line once again goes back to the COVID lows. You can see we hit the high, right? Bounce there, up here. This is recent, right? We hit these highs up here, October, November, bounced off the high there. Now look at this. These are monthly bars. You can see the base of those bars respected this line tremendously all the way here. 1, 2, 3, 4, 5, 6 months. Now this is the 7th month. This is going back since June of 2025. You can see we start getting a close below this yellow line here, and I drew the arrow there. If we see this bar, like this month, close down below this yellow line, that could be the beginnings of this move downwards. If it pops up, we could continue trading in this channel. But the probabilities are close below this line, then we're looking down, trading at some point down to that line down there. That's the 24, 25,000 area. So I just wanted to call that to your attention. What's also interesting is I did a detailed analysis in the daily chart. These are daily bars. We had a gap. This gap was October 2025. I drew support and resistance lines starting from the gap October 2025. All right. Typically, what happens is when there's a gap like it was here, price wants to come back and fill that gap, but price, a high percentage of the time, wants to come back and fill it because they're buyers and sellers that never got filled. So it's like a magnet. Price wants to come back and see who's trading in here. So at some point, it wants to come back. So that's why I drew those lines. Oftentimes, it becomes a very good area of support and resistance. As you can see here, those lines became good resistance, right? Market dropped down, came back up, resistance once again. Market came down, resistance once again. What was very interesting is at this cross here, right before the cross, typically what happens right at that intersection, price is going to want to move one way or the other pretty significantly. And it gave us a little fake out, right? Before that cross, came up right into the resistance zone that we identified way back here in October, right, respective all the way through, and it could not break out of that resistance zone. Well, that's not good for the market. It's showing a weakness. This little pop that we got here at the all-time high, the market is having a very tough time getting anywhere near up here again. As a matter of fact, right at that exact intersection, I was watching this because either the market's going to pop up real high or it's going to drop down real low. But there's going to be some explosion right at that intersection. And that's what happened. The market came crashing right down, next few days, real low. And this is Trump talking again about the tariffs. And some news came up. Basically, he's trying to rally the market a little bit, but it's not working. Exactly at that intersection, I drew another resistance line. Market came up right there at 25,653. And it's trying to get through there, but it can't because it's right at that intersection of the support and our resistance lines. So here we are, we're stuck right in this channel right here. So point is the market's struggling. These are our fusion candles. Green is good, red is bad. It's good. Momentum is up and everything's positive. If it's red, it's down, things are negative. It's a very simple way of looking at candles and saying, okay, is it a good day or a bad day? So we can see right here, this last week or so, it's been all red. It's trying to jump up a little bit, but it's struggling. So probabilities based on this analysis is also to the downside. Okay, let's take another look over here. Let's break this down even closer. The last video I did, which was session 5, that was right here. That was January 12th. We talked about, once again, went through all the reasons the probability was strongly to the downside. Also, back on December 7th, we also talked about many reasons while the probabilities were extremely favorable for the market to drop here. We had a whole video on it and it dropped significantly. Then on December 21st, had another video talking about why the market's topping here, right in our profit zone, came right back down. We mentioned our targets are the fib numbers, 38.2 to 50%. That's where you're making your profits on the short side. And sure enough, it hit it exactly right there, 25,374, which is the 38.2 fib. It nailed it. And then we're looking for a bounce off of that. We have our profit zone marked right here. I've had these profit zones in here for about a month now. So whenever price gets to this profit zone, we want to be closing out our positions, right? Taking our profit. And then the support zone down here, whenever price is down in this area, this is a great buying opportunity. And being short, you want to be closing out your positions and taking your profits and want to be buying down here, all right? So anyway, back on January 12th, we had a nice of this during the video, talked about why the market probabilities, once again, we're going to the short side and why we said it's very extremely high probability that the price is not going to get above 26,124, although it was very close and it didn't. It came shooting right back down to our 50% fib number, 25,142. Then it bounced up again and tried to get through it again. Couldn't do it. This time it hit right at our support zone. Right between that gold line and the white line is our ideal support zone. Very strong support. And it hit it, nailed it exactly on the 50% retracement off the fib high. That's the fib low. That's the fib high. 50% of that's right here. 25,142. Nailed it almost to the tick. Perfect. So of course, from there, we want to get in. We're not going to be selling there. We're going to be going long, put our stops down here and going long. This is today, January 22nd. right up into our profit zone. So once again, because of those other charts that I showed you, and there's some other ones I'm going to show you here real soon, the larger probability is still sideways to down. There's not much strength at all in this market. Now, could it change? Absolutely, it could change. But as I mentioned in my last few trade tracker videos, I'm a very short-term trader. I look at what's happening today and I execute that into tomorrow. If things change next week or next month, of course, we'll adjust accordingly. But right now, looking into tomorrow, we are looking for a sideways to down. And even into next week, unless something significantly changes here, we're looking for another move down, just like we had on the 7th, 21st, the 12th, and now the 22nd. That's where we're looking. Our first target is right here, the fib, the 38.2 fib, which is 374. If the price breaks through there, if we get a close below there, then the next area of profit is the 50% fib, 25,142. If that breaks, then the next support is the golden ratio, 24,910. That is the gold line. That's the ultimate support right there. That's very high probability. If and when price gets down there, we're going to see another bounce. So we're in a channel here. What's happening? Anyway, that's where we're at right now. We'll see how this plays out based on the probability analysis that we're looking at. We're looking to the short side. I just did a video on probability bands. I highly suggest you watch it. It's a special edition video. It was just released. I just released it actually today. I highly suggest you watch it. The special edition trade tracker video covers probability bands. These bands will help you significantly in your trading. However you enter long, short, and whatever your strategy is, when you lay this filter of probability bands on top of your charts, you are going to see the markets in a way that you've never seen them before. It will become very clear, very obvious, and very evident which trades you should be taking based on your setups and which ones you probably should be taking a pass on and not be taking. So what I'm going to do is show you very quickly how it worked out these past few days. These are the probability bands. Green band, the 54%, that's a high probability where price wants to go. Price wants to navigate there 54% of the time. The upper acceptance band, 25,660 to 25,720, that is within this green, right? We have 374 to 740. These two numbers are under 740. So this upper acceptance is actually right now in this particular structure within this green zone. So what that means is the 660 and the 720 is like a magnet. Price, whenever it goes above it, wants to come right back down into that 660, 720 zone. If price falls down, it wants to come up right back into that 660, 720 zone. This is not a trading system. These are filters. You need your own entries, or you can use the Apex multiple time frame strategy as well if you like. We'll get that out to you and you can use that. But this is a filter to use, and you lay this on top of your chart and you're going to see some clarity that is going to really blow your mind. So let me show you how this played out. Here's that 54% core acceptance band I was talking about, right? There's the numbers 374 to 740. I have these in real big numbers and a heavy line because that's where price wants to gravitate to. It's like a magnet. That's where buyers and sellers are most in agreement on price. Then more precisely, there's that upper acceptance band I was talking about that's within that core acceptance of these two lines, right? This is the ultimate magnet right here. The 660 to 720, that is where price wants to get to. So when you're trading, if you're below this area and you get a long signal based on where you're at with these other bands, it's going to most likely be a very good positive long signal. Conversely, if you're up higher and you get a sell signal, it's going to likely be a very high probability sell signal because price wants to come down right in the zone here. So let me show you how this plays out. This is Thursday, January 22nd. The stock market closed right 3 o'clock Central Time. And look at where it closed. That circle is where it closed, right inside of the 667.20. It just blows me away how this is working out so well. This is yesterday's close, Wednesday, January 21st. Close down here. Price wants to move back up into the zone. Now, this was the close prior. This is Tuesday's close, January 20th, and this is the Wednesday morning open. Now, I want to call your attention to something. A lot of things line up here, which is very interesting. Right here, we're in our lower acceptance band. 38% of the time, price wants to operate within this band. 54% of the time, it wants to go over here. And 18% plus 54, it wants to go in this 18%. So upwards of 70% of the time, price is going to gravitate right here. In the last few weeks, that's exactly what we've been seeing. So what I'm getting at is this is the open on Wednesday, 8:30 a.m. That's where the stock market opened. I want to call your attention to something. Remember this over here? Right here? Guess when that is? That right there is the stock market open Wednesday, January 21st. So not only is price right on our 50% fib, our support zone, but in addition to that, if we go down to the smaller time frame, now look, we're right here in our lower acceptance band. So the probability is extremely strong that price is going to go where? Back up here to this upper acceptance band. Went from here, and then it took a day to get here, and the next day it went there. So you can see it leapfrog. 1, 2, 3. It wants to go up. So regarding the fusion candles, the way we trade this, whenever we have green fusion candles, that's when we're going long. Okay. We get down to our smaller time frames. The red fusion candles were out. We closed our trades up here. Green, we go long again. Once they stop, we get out. We're only going long on the green fusion. That's it. Okay. We're not taking short trades here. We're only taking long trades going up. Why? Because we're bouncing off of our support. So we're going to be looking only for long trades that are green moving up. All right, this is Tuesday right here. If I go back, see how these bands worked here. Yeah, this is Monday's close. Look at that. Right on our band, our core acceptance band, right on it, closed. Looking at how price moves very smoothly in between the bands. This is going back, this is last week. This is Thursday of last week, closed right at the high of the band. Then it comes down, closed at the low of the band. Price loves to trade within this probability band structure of this area. I remember how I said this little area in here, the 660 to a 720, that's where price wants to gravitate to. That's where buyers and sellers agree most on price. I call it the happy place. Well, look at it. Price is up here. It comes back down in between these gold lines. Price comes back up, right back in between the gold lines. Price comes way back down here. We're anticipating to go back up into this upper acceptance zone. Now, I'm just showing you a big picture here. Of course, you want to go down to our smaller time frames and we're micro trading this. But look, it ends up right back up to our upper acceptance band here. And that's the 660 to 720. It's just remarkable how this works. When you combine these bands with whatever entry you're using, or if you want to use these fusion candles here, if the fusion is green, you want to be going long. If the fusion is red, you want to be going short. It just works out real well. Once I get the Apex Traders Club opened up, I'll be shooting out these charts to you real time. I know it's tough when I go back and it's all past data. I just can't wait when I can just send you out signals real time, show you what's going on, point this kind of stuff out to you as it's happening. I can screen share these signals, get them out to you. Another 2 weeks, I'll be ready to open up. Okay, let me show one more chart. Now, this is going down to the real small time frame. This is today. This is a minute chart. Here's our core acceptance band. Here's our line lines. They're the heavy lines, the dark ones, 374 to 740. That's the playing field we're looking to stay within. That's the high probability. Over 50% of the time, that's where price is going to want to stay. And keep in mind, this is our upper acceptance band. Since that's within here, that is the gold standard. That's where price wants to go. That's what we're shooting for. The Apex multiple time frame strategy signal. We got a signal today. This was earlier today. This was 9:36 a.m. Central Standard Time. We got a buy at 623.5. We're definitely taking that one. Why? Well, because we're in our core acceptance band, which is a very favorable place to be trading, number one. Number two, we have our green fusion candles. So that's positive, right? Number three, based on the probabilities, we're expecting price to go back up to this acceptance band. So based on the buy signal, which is the signal by itself is good, you combine it with the green fusion candles, number two, which is good. We're in our core acceptance band, number three, and number four. We're anticipating price to go up to our acceptance band. What happened? Price shot up. Look, it tagged it right at the top. Let me see, what was that high? The high there, 25, 712, 716. That's within ticks. 25, 721 was the high. And there's our number, 720. So it hit within one tick of the high. Okay, it bounces in between here. Why does it bounce? Because that's where buyers and sellers are most happy, right? They're just trading back and forth. Price comes down, it wants to come back up. So, like I said, these probability bands are not buy and sell signals. That's not what I'm trying to illustrate here. It's just a framework. It's like a football field. And you have to have your own place to execute on the field. These bands are the football field. This is a high probability area for price to go. That's where price wants to go. Now, based on whatever signals you have to get you there, whether you're above this or below that, that's great. If you don't have signals, you can use mine. We only had one signal today, but that's okay. One signal got us in here right around 25.6, got up here at 25.7 or so, 100-point move. Whether you got all that, some of that, part of it, whatever it is, it's positive. I'm going to have some sessions that show you how we position our stop losses. We have various profit targets we take along the way, and we have some runners as well in case the market takes off. We have trailing stops in here too. So I'm just trying to explain to you the big picture how this works. All right, I think that's enough for now. I'm trying to keep these videos under 20 minutes or so, 25 at the max. That's hard to do because there's so much to share. But anyway, hope your trading is going well. I'll see you again in about a week. Have a good day.